Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for November 26th, 2017. Market breadth. With this past week's market fractional decline, our bull-bear point and figure ratio at 1.46 rose from 1.18 last week, advancing within bullish territory. The total count of securities in bullish or bearish patterns decreased 1% to 3,084. The count of bearish stocks decreased 12%, while the count of stocks in bullish patterns increased 9%. The Pirls P&F Market Breadth Summary Chart shows us a market now 13 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To sign up to receive the weekly Pirls Stock Market Commentary email, free of charge, simply enter your name and your email address in the spaces provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 91 points for the first advance in 6 weeks. At a positive 124.76 points, it continues below all 7 tops in the last 30 months and continues above all 5 bottoms in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in distribution mode on higher average daily volume. Momentum. The CCI 20 daily, in a Woody's uptrend, is now at 188.55, up from 94.21 last week. At Wednesday 11:15 close, the CCI 20 daily was within the plus or minus 50 range for a zero line reject pivot and long entry signal at Thursday 11:16 close. We will stay in the trade until the CCI 20 daily falls below plus 100. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 82 weeks ago, while the daily CCI 20 began a Woody's uptrend 11 weeks ago. The CCI 20 weekly, at a positive 153.02, rose from a positive 135.87 last week after forming a zero-line reject long entry signal for Tuesday 9/5 open. Our rule is to stay in the trade until the CCI 20 drops below plus 100. We will continue to follow the result of this trade simulation in next week's commentary. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and 4 of the bottom 5 are negative. Summary: some tech and retail on top, oil, oil services, and REITs on the bottom. Bullish, computer hardware, disk drives, and networkers continue in the top 5. S&P Retail has entered the top 5. KBW Bank has left the bottom 5. Oil and oil services have entered the bottom 5. Bearish, REITs has entered the bottom 5. Focus this week from www.davidstockmanscontracorner.com, the Delirious Dozen of 2017. The following are some key points. Yesterday, we noted the massive market cap inflation and then stupendous collapse of the delirious dozen of 2000. The latter included Microsoft, Cisco, Dell, Intel, GE, Yahoo, AIG, and Juniper Networks, plus 4 others which didn't survive: Lucent, WorldCom, Global Crossing, and Nortel. Together, they represented a classic blow-off top in the context of a central bank corrupted stock market. What we didn't mention yesterday, however, is that this bubble top intumescence never really came back. In fact, the market cap of the 8 surviving companies, all of which have continued to grow, today stands at just $1.3 trillion, or 34% of the 17 years ago peak. We revisit the rise and fall of these turn-of-the-century high flyers because we believe the same process of market narrowing into a diminishing number of Momo names is exactly what is happening again as we reach the asymptote of this latest and greatest central bank-fueled bubble. We have identified a new roster for the delirious dozen of 2017 and have tracked their course over the last 40 months. Accordingly, our new delirious dozen consists of the FAANGs, Facebook, Apple, Amazon, Netflix, and Google, plus 8 additional high flyers: Tesla, Nvidia, Salesforce, Alibaba, United Health, Home Depot, and Broadcom. Not surprisingly, their combined market cap has soared from $1.7 trillion to $4 trillion during the last 40 months, in a pattern which is highly reminiscent of the last go-round. And for our money, that $2.3 trillion gain represents the same kind of bottled air. S2P note: see Stockman's blog for a quick analysis of each. In short, among the delirious dozen for 2017, only Apple has a reasonable multiple at 19 times. But then again, Apple has been cycling along the flat line for more than 3 years at its towering sales level of $230 billion and $50 billion of net income. In short, aside from the unique case of Apple, the delirious dozen of 2017 are set up for a repeat of the massive 2000 to 2002 deflation of bottled air. That is, in June 2014, the group, ex-Apple, had a market cap of $1.1 trillion, representing 34 times its combined net income of $32 billion. Needless to say, the business cycle has not been abolished, and this expansion is now 101 months old. In fact, the chart below suggests it may be reaching its sell-by date. But here's the thing. The bottled air resident among the delirious dozen of 2017 is where all the top of the bubble mania has again gotten concentrated. So when the black swan, orange swan, or red swan, as the case may be, finally arrives and they begin to sell Amazon, Facebook, Tesla, or CRM, look out below. That's where Wall Street's next central bank-fueled bloodbath is hiding in plain sight. Thank you for watching this week's Sand to Pirls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you have been enjoying a joyful and peaceful Thanksgiving weekend. Hoping that you are looking forward to a prosperous and productive week coming up. And wishing you true success.